Hey there, this is Jason Eichmiller, reverse mortgage expert, and in today's video I'm going to teach you how your parents or your loved ones or maybe your spouse can actually use the home that you're living in to pay for your home health care. You can see that's the title, Use Your Home, and this is a terribly drawn house and two trees to pay for home care. Right now, before we do it though, if you don't mind, if you haven't subscribed already, and if you like getting content about paying for healthcare and reverse mortgages, go ahead, hit the subscribe button. And also, if you don't mind giving me a thumbs up right below, I'd really, really appreciate it. It helps me reach more folks who can use some help. So let's talk about home healthcare, and let's talk about how expensive it is. And I'm going to talk about Judy for a second. She's a client that I recently helped, and she used a reverse mortgage to stay at home. But Judy's home care was costing about $12,000 a month. That ain't cheap. That is a lot of money. And Judy didn't have some of the assets in place to pay for it. So if you think on let's put Judy off to the side for a second, but think about what assets normally you have or how you can pay for home care. Number one, maybe you have insurance. Maybe you got long-term care insurance, or you have a rider on your life insurance policy. If you can use that for home care, bingo, perfect, use it. Judy didn't have that though. There's also Medicaid. Medicaid is something, depending what state you're in California, you have Medi-Cal. In Pennsylvania, it's Medicaid. Most of the places, it's Medicaid. Sometimes Medicaid pays partially for home health care. Judy had a little bit too much money in the bank, and she brought in, her monthly income was just a little bit too high to qualify for Medicaid. So that one struck out too. But if you can use Medicaid, definitely do it. Judy had been using her own funds. She had a bank account. I won't get into exact numbers, but her bank account was at least a few $100,000, and every cent of it was being spent on her medications and her CNAs for her home health care. So that dwindled down, and when Judy got in touch with me, she was down to about $35,000, which was just a little bit less than 3 months of home care. Really, really, really scary for her and her family. It wasn't a good feeling. So that's an asset you can use, by the way. You can, if you have money in the good old bank, you can draw it down, but remember that there's only so many leaves on that branch of your money tree. So once you pluck all the leaves off, there's not much else that you can do there as far as those assets. We've had kids, if I'm speaking with you right now, if you're a child of a senior who needs to either get home health care or continue it, kids oftentimes dip into their own reserves, into their own savings. The challenge there, though, is most of the kids, like for me personally, I've got 3 little kids. They're 10, 8, and 6. And I've got a couple of nuts squirreled away, but I certainly couldn't afford the $12,000 if, God forbid, my parents needed to go to needed home health care to avoid the nursing home. So occasionally, if you're really, really well off, then you can use your own assets. But I know, like with young families and trying to save yourself for retirement and pay for your kids' college, that gets really tough as well. So that's an option as well. Then you have paying for using your life insurance policy. So we have some folks who have a pretty well-funded life insurance policy. They can use that as an asset to actually squeeze some cash out of. Sometimes it's just kind of turning on some income. Sometimes it is actually surrendering the policy for cash value. And I'm getting a little technical here, but again, I want to go over all the different ways that you can pay for home health care. Judy had a little burial insurance policy. It wasn't even, I don't even think it was $12,000, and normally cash value on life insurance policies aren't anywhere near what what's called the face or the insurance coverage amount was. So Judy had already run through her bank account. She didn't have the insurance policies. She didn't qualify for any of the Medicaid, and she wasn't in a position to ask her kids for help. So what could she do? Well, fortunately, this is where we get to the good part. Judy had a house that was free and clear. She had paid it off years ago. And the house, when we got it appraised, the house appraised for right about $730,000. So actually $735,000 if we want to be like right on the dot. So what we were able to do was we were able to use Judy's home as kind of another branch on her money tree. It just, we poured some really strong fertilizer on the tree and it grew out a couple really big branches with a lot of money on them. So based on Judy's age, and she was 76 years young, and her home value, of course, again, $735,000, Judy was able to pull about $430,000 out of the house. That's $430,000. And of course, she doesn't have to pay taxes on it because, kind of going down a rabbit hole, but with reverse mortgages, you never have to pay taxes on the money that you get out of the reverse. If you want to know why, go ahead and ask a question below, or you can reach out to me, and I'm glad to share that information with you. So anyway, Judy was able to get $430,000, and again, she didn't need to use it all at once. Her home care only cost $12,000 a month. I'm saying only, right? That's an incredible amount of money. But she now has years that she can live in her home comfortably. And I know the weight is off of her shoulders and the weight is off of her family's shoulders. It's just, and for me too, being able to take somebody from, remember, Judy only had a couple months left of home care really in her savings before she was going to have to go to a nursing home. So I know that weighed deeply on her shoulders. And for me, just being able to go in and just tell her, like, Judy, because you're sitting on this house, we're able to convert some of it into cash, and now you're going to be able to live in your home for the rest of your life. It's awesome. It's such an awesome feeling. And Judy, like, if you think about probably like your parents, if you're a kid, or your spouse, if your husband or wife needs this care, maybe you're an attorney or a CPA, your loved one or your client wants to stay in their home. In fact, like, according to like the people that I speak with, about 90%, 93% actually of the folks that I speak with, they want to stay in their home for the rest of their lives. So this is just a reverse, is just a way, just like if you had assets, you'd be taking them down. Just like if you had a life insurance policy, you might surrender it. You have this house. You can get some money out of the house, still live there, still own it, not make monthly payments. And this is huge too, actually. I didn't touch on this. But with the reverse, you may or may not know this, but your kids are still going to get the house when you pass away. And that was important to Judy because she wanted to make sure that, that her kids were going to inherit it. The kids didn't care. They're like, man, we got our own stuff. We just get as much money out of the house as you can and live there for the rest of your life. That's what the kids were concerned about. But Judy wanted to leave them a little something. But it was nice for her to know that, hey, this money that you're going to use, yes, of course you're going to owe us, and it'll be paid back when you pass away. But all that extra equity that's left in, remember, she's only getting like $430 out of a $730-something thousand house. So there's a lot of equity that's left over. It is going to go to her kids. So she's able to kind of like smile at that. So anyway, this is kind of, I wanted to teach you kind of at a 10,000 foot level, if you need home health care for a spouse, for a parent, for a loved one, or for a client, this is kind of how it works. If you have a home, we're able to lend you, depends on your age, but somewhere between about 45 and 70% of the home's value in tax-free cash. You can take it, use it to spend on home care. If you don't want a big loan size, then you can actually leave the money in a line of credit until you take the funds, and thus the money that's in the line of credit doesn't even get charged any interest, which is awesome. So if you want help, if you'd like to see, hey, does this work for me? Can this work for my family member, my loved one, my client? Then go ahead and reach out, and you can reach me. Again, my name is Jason. You can reach me. I'll have my contact information right below here. but you can get me at 888, this is a toll-free number, 888-309-9705. Again, that's 888-309-9705. Or you can just shoot me an email over at jasonie@reversemortgagereality.com. Again, that's jasonie@reversemortgagereality.com. If you haven't done so already, go ahead and click the like button. If you haven't subscribed, and if you want to see more relevant material about reverse mortgages and aging in place, go ahead and subscribe. And if you have a question that you think others could benefit from, go ahead and enter it below, and I'll personally answer it. All right, thank you so much. Thanks for hearing Judy's story. And if I can help you in any way at all, feel free to reach out. Thanks so much. Take care of yourself.